been falling as well. This is actually good for our export market. So companies that are actually doing business abroad will start to see a benefit of that, because it will be cheaper for us to sell our goods offshore.
And we did look at it 3 weeks ago, as we say, last month, when last time they looked at the interest rates. It was pretty much, they were saying it was quite certain that they were going to do it then, and they didn't. Why is it much more likely now?
What the Bank of England and what the financial pundits do is that they tend to give you a little bit of a heads up, okay, this is what we're likely to do. So the first round of it will be us telling you we're going to do it. The second round is more likely that they're going to do it, because they're giving the markets a chance to adjust to the fact that this might actually happen. So the reason that it's more likely to happen now is, as you've rightly said, the economic data has come out, has shown that the UK has slowed down somewhat. My own personal opinion is I'm not surprised, because if you look at the Purchasing Managers Index, which is the index which tells you how much people are paying for their raw goods and materials, that's been riding really high for the last 3 or 4 years, for the simple reason that oil prices have been low, commodity prices are low, you can buy things in the market, raw goods, much cheaper than you have them for a long time. And I think what they've been doing is stockpiling while the market's cheap. Well, at some stage, you can't keep stockpiling because you've nowhere to keep your stuff. So you've got to start slowing down when you're buying and then start to produce some goods. Ultimately, these goods come into the marketplace. The companies make a bigger profit on them because they haven't had to pay so much for the raw goods and materials. So they make a bigger profit, which ends up in the stock market going up, which is also what we've seen in the last couple of weeks. It's the market's going very well. So it might not be bad as people think. The one group of people, unfortunately, are going to take a pasting are the pensioners and the people that have got amounts of money put in their bank deposit accounts, because the interest rates now are going to be abysmal.
Yeah, so if you are a saver or you've got a pension, then it's not good news.
Well, your pension should be affected, because your pension shouldn't be invested in the Bank Building Society. It should be invested in a portfolio of stocks, shares, fixed interest, gilts and property. So you should have a spread portfolio. And if your financial advisor has got his head screwed on, he'll be making sure that he's moving your money around into these places to make the best of the growth that's available. So, as I say, the people that will suffer are going to be the depositors, the people that are actually putting money into the Bank of England and expecting to get a good return. Well, it's not going to happen. You're going to have to get off your backside and go out and take your money somewhere else. And the best advice I can be would be to look around the market, find yourself a good financial advisor that knows what he's talking about, and say to him, what's the best deal that you can do for me for a very, very low interest, for a very low interest environment? But I actually want to make more than that, but I still want to do it safely. And your financial advisor should be able to do that for you.
And this is all because of Brexit, presumably, Frank. Is this the shape of things to come, or would this have happened anyway?
No, this has nothing to do with Brexit. Brexit is just a smokescreen.
Okay.
The whole reason that this is happening is the fallout still from the recession that we had in 2008, 2009. When the banks overspent their commodity money that they would be putting out into the mortgage market, a lot of those mortgages went wrong and it left them short of cash, which is why people like Northern Rock and Royal Bank of Scotland and people like that ended up looking into the purses, and the purses were empty. So they had to go cap in hand to the government to regain some capital, and they're still trying to repad that money back out. And the problem is that in this low environment of very low interest rates, they haven't had a lot of opportunity to do it because we've got zero inflation. And you need inflation in the marketplace to give you the opportunity to add your interest onto the marketplace and get that to grow. So, Brexit, I'm afraid, is a smokescreen.
Okay. Frank Cochran is a finance expert from FSC Investments, talking about interest rates looking at being cut today.